Broadcast. Welcome to the Zaner MarketCast, episode number 40. Your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto, and I'm here with
Dan Hussey, everybody. Glad to be here.
Dan Hussey, everybody. Where you been at?
Been in back and forth to Florida a few times here. Got back in last Sunday from the trip with my family to turn around and take my dad to Miami for the Orange Bowl, where I subsequently have lost my voice, but watching the Irish to victory, baby.
Who was in that Orange Bowl? Was it
Notre
apples
Dame
versus
Penn
oranges?
State.
Oh, wow.
Almost. A little Irish man versus a Nittany Lion.
I guess so. Who won?
Notre Dame won in an absolutely great football game. Penn State and Notre Dame leaving it all out on that field. Man, it was good. I feel like a curse is lifted because every other bowl game I've ever been to in my life, I've watched Notre Dame get trounced. So I get this one, baby. I get this one.
So it'll be Notre Dame versus the winner of
Ohio State, Texas. So that's another big game there. You know, a little bit of office rivalry. If our very own Adam Packard being a big OSU
shout out
fan,
to Adam. Yeah.
The
cool. Ohio State.
Right. It would be way cool to face them. Not that I wouldn't complain if it was Texas, but I think they'd be a little bit of an easier team because Ohio State has just been crushing it this year. But it'd be fun to have a little office rivalry there with Packard if they can pull it off in their game, which I think is tonight, actually. So I'll be definitely watching that.
That'll be so crazy. How neat will that be? So,
yeah,
Dan, today we're going to talk about all of the acronyms: WASDE, 45Z, H5N1, SAWX. This is an all acronym podcast here today.
And a lot of numbers and data dumped on us today.
Yeah, a lot of numbers, a lot of data. I'm certainly more confused now than I am normally.
Right.
Before we get into you helping me lift that confusion, we want to let everybody know that if they are interested in hearing about grain market price action and strategies, you can sign up for our Ag Hedge hotline hosted by expert market strategist Ted Seifert, who will be on Market to Market this evening. If today is Friday, I think he'll be Market to Market tonight. Certainly folks should check in and take a look at that, both Market to Market and then the post market talk that they do should be very informative and going to be a lot of people very interested after today's action. This Ag Hedge hotline, totally free, gives you the chance to connect with us personally if you have any specific questions about markets or agricultural commodities in general. If you're interested in learning more about how this price action works and how to make it work for you, it's a perfect way to take that first step. Link is in the description below to sign up for that. Totally free, zero commitment. Yesterday, we did a quick update. Dan, unfortunately, I took the time to educationally try to help listeners and producers with bean puts, just from an educational perspective, which would have been totally worthless today because as we can tell by jumping into the weekly numbers and the WASDE recap.
To be fair on that point, Joe, if it's something you didn't do yesterday, right, we are at much higher prices. And if you didn't want to sell yesterday because it was too low for your taste, hey, we are almost 30 cents higher on a big upside day. Not saying that the top is, here and now, right? This market, we'll talk about the technicals in a bit, could keep going, but it is definitely good to have that mindset or be thinking and, at least have a plan in place to be able to action on something like that when the time is right. If yesterday wasn't it, if today isn't it, right? Because as we rally higher, I think we can all agree at some point the market will top out. It always does.
Well, we'll see about that, I guess. We opened this week at 993 3/4. That's March beans. The high was 1033.5, low 985.5. Last trade 1025.25. Dan, that is up 33.5 on the day. Funds came into the day short about 50,000 contracts. November swing high, just to jump right to the technicals. November swing high 1055, 200 bar moving average overhead at 1081 3/4. What else? Technically, what else do we see?
You've got the highs from November at around 1052. That's kind of the next big area we got to get through. We broke through that downward sloping trend line on the chart that was coming in around where that 18-day moving and 55-day moving averages are, which are all now below us and have been supportive. We closed above that 100-day moving average, which is at like 1019, I think you said. So 1052 is that November high for the bean chart, and above that is 1099, the August or September highs, with the 200-day moving average, as you mentioned, which is at 1081 right between there. So there's definitely some levels to throw a dart at here as we go up. But more importantly, now I think those levels we've broken above, below, you're going to want to watch for potential support. 1015, the highs that we just broke out of today, that 100-day moving average at 1019. And don't forget that old range that we had between like 990 and 1008. You kind of want to see the market stay above that 1010 to 1015 figure at the bare minimum, and staying above that 100-day at 1019 would be pretty key in the short term.
Dan, U.S. crop production numbers, yield for beans came in at 50.7. Trade average was 51.6. Harvested area, 86.306 was the trade average. 86.05 was the number we got today. That was an actual decrease in harvested area for beans, along with a decrease in yield. And then production, of course, declining from the trade average guess 4.453. Today's number 4.366. Dramatic reductions, yes?
Yeah, pretty big reductions there. And we'll talk about what's that means for that. Did you mention there the carry out and our
world
ending stocks?
Ending stocks for world ending stocks. Trade number was 132.20. We came in at 128.37. U.S. ending stocks came in for beans. Trade average was 0.457, and you're right. We came in at 0.380, 380. I don't think anybody had that on their bingo card here today. And
if I'm not mistaken, I think
30.
the lowest number was around the 420 million bushels from the trade.
I think
guess.
You're right.
So
that range. I don't have the range in front of me, but
50 million bushel below. Yeah. So the 380 million bushel soybean carryout number, that ends up getting really tight, and or is a really tight number. And we got to start thinking along the lines of pipeline for bean production here. 180, 190 million month usage from the crush in the U.S. We barely got 2 months of crush there. Exports have been waning the last couple of weeks and have been off to a decent start, but not anywhere near a record. If exports were to pick up, that's how we start talking about the narrative of running out of beans.
Is it too early to start talking about the price action having to ration bean demand?
I think that's a big reason why you see a 26-cent up day, right? I no doubt. You hate to go down the road of calling this, highway grain robbery because of the low prices we've had, and now the market rallying in the face of that. I think the market is starting to do that to some extent. We had pretty big volume number today at 254,000 traded in the March contract. And, I think that you got to start thinking about the funds having liquidated their entire short position and now having potentially flipped long as well. That's how you're going to ration this out.
So you and I were debating that before we came on, and I'm going to be interested to see. We're not going to really get a clear picture because the CFTC report we get today will be from Tuesday. So we'll really be looking at next week's number and having to rely on some of the estimates as we come into the beginning of the week in terms of where the funds are. Because that, as you mentioned, that could be a big deal. And you see the same thing in meal, where we came into the day with soybean meal, March meal, funds short about 81,000 contracts.
Yeah.
So that is a lot of fuel for a lot of fire.
That's a lot of fuel. Exactly.
Opened the week in meal at 310. The high was 314.40, low 295.10. Last trade I saw was 298.30. That's down 10.30 on the week in the face of this.
A weird chart, right?
Right. Down a lot in the face of this bean strength. But funds are short 81,000 contracts, and could be that chart may be turning. Oil, same story. March opened 39.99. High was 45.76. Low 39.87. Last trade 45.58. That's up 5.65 on the week. They're short about 19 or 20,000 contracts coming into today. I saw a comment in some of the WASDE info that your exports of soybean oil and use of soybean oil also also saw some changes. I don't have those in front of me, but could be that we're going to start working on that price too, huh?
Yeah, and it's been interesting to that note that we've seen bigger than expected meal exports this year as well. It's almost like China doesn't want to take and other countries don't want to take the beans for processing themselves for whatever reason. Maybe they're backed up, maybe they've got enough on hand, but they still have demand and need for the underlying products. I also think that our prices were so low that you could ignore the value add for crush and pick up meal and oil on the cheap, unfortunately, right? And meal still is that way, I think, under 300, but the oil definitely responding today, a bit of more of a news day, as we know, with other announcements that were very oil centric that we'll get to in a bit here. And not to leeway us into that, because we've got some other numbers to cover, but we will be covering some of that information here and why the meal or the oil was the big gainer for the day.
How about corn? On the week, we opened at 451.5. The high was 472.5. Low trade 451.5 right on the open for the week. Last trade, what I think was 470.5. That was a really nice close in corn. We closed just two off the highs, essentially at the highs, up 19 3/4. Funds come into the day long 230,000 contracts. You and I, a little mini debate before we opened here, talking about how long can the funds be, and purely conjecture because we just don't know, right? But you're of a mind that maybe they're up around 300,000 or maybe 300,000 plus after today's price action.
Yeah, if we came in the day, in theory, 230 to 250, let's call it, somewhere shy of 250,000 long. That big volume bar on a day like today, trading 438,000 contracts in the corn, massive volume. I mean, you could have easily added 100,000 on a day like today. Not saying they did, but it's possible, right? With that type of volume, to have done that. But I will say this, corn added a significant, price, or corn flipped from a significant short down at 410 to a pretty significant long at 458, 460. We're at 470 on big volume. You got to also wonder, how overbought is the market starting to get in the short term? Not calling for a top here in corn after today's numbers and the price rally we saw, but it is something to consider, right, about the positioning that we've seen in the commitments. And like you said, it's all very delayed. The commitment of traders that comes out on a Friday is a snapshot from Tuesday. So we won't even know how this day, traded from the CFTC until next Friday. And that's,
we'll have estimates.
Right. We'll have great estimates from ADMIS and other sources that publish them daily. But that true CFTC number is going to be like old news by the time we find it out here in a week.
For sure. And I would think too that we can continue to watch the trend in terms of fund participation. If they bought 10, 20, 30, 40, 50,000 contracts today, and then they show up again on Monday and buy another 10, and Tuesday and buy another 10. I really, what I'm having, while I'm listening to you, I'm trying to dredge out of my horrible memory what the peak fund position was. Not that I think that this may be a circumstance for peak fund position.
Oh, they have
a lot of ammo. Right? They got a lot of ammo, right? They've made some good
is not
money.
The peak. No. I think it's in the high threes, if I'm not
380,
mistaken, like 380 or something like that. And that's all just from memory, right? And we'll definitely hammer out those numbers. And if you want to get those numbers from us, give us a call. You know where to find us, folks.
Dan, technically, June 13th swing high was 487. Mm-hmm. What else do you see that is technically relevant? All the moving averages are below, right?
Right. The spaghetti is all below us. That downward sloping trend line we've been below since, June of 2023, and it held there in, June of 24. We're above that level now. And you're back into that old trading range from February of 24 that led into the summertime high at 506. So I really think, now you've got to be thinking about the $5 mark, and can corn get there? Can corn get above it? I think that there's going to be a lot of producers selling. Personally, I would be taking advantage of this type of rally. Maybe not today, but certainly be thinking about how I can protect my crop that was otherwise almost $1 lower here just a couple months ago, and getting a great opportunity to do some selling, at prices that now you might have regretted not taking advantage of from last year. Right. And that doesn't mean that you can't come back and re-own and do other things to keep the upside open. But prices are good again. Think about the marketing plan and how to use that to your advantage is all I'm trying to say.
So, and here's the question, right? So you get into the U.S. crop production numbers, yield in corn, trade average was 182.7, and we posted a 179.3 today. Harvested area, trade average
and I don't
82.
mean to cut you off here, but
Go
that
ahead.
yield number was the biggest, I think, reduction. I think I saw Karen Braun point out that was the biggest miss in the history of that number.
Beans too, I think. Beans were there.
3.6 bushels an acre miss on that.
Still a record, but no 183.10, right? So you look at the delta on that, 183.10 all the way down to 179.3. I mean, that's a sizable reduction, right? 23-24 was 177.3. You're only 2 bushels above that, and certainly a record. I get it, but so then this harvested area, got it. Production number, trade average was 15.095. We came in at 14.867. Dan, that brings us to an ending stock number. Trade average was 1.675, and we hit 1.540. That's a lot tighter. And so that's not the last time we're going to look at this number, is it? I mean, do we have another chance here for this? I mean, this number. And so what they did too is they also changed feed and residual. They cut back exports. That cut in exports to me was laughable. They're going to have to come back and add those exports back in.
Well,
we're 28% ahead of last year.
That's the $1 million question, though. Are they reading to us? And that's one of those things we don't know in the numbers they're playing with us. When they cut productions like that and then start cutting exports too, it's like, okay, what are we doing here? You're just moving that range and goalposts down, right? Where, okay, we're getting less usage, but there's less there to be used. So, at the end of the day, the drop in carry out though was the big, you realize the delta.
I'm glad you said that, because that was my question to you, is that what maybe we've seen a lot of farmers selling already, and I wonder what is left in farmers' hands.
Mm-hmm.
They painted a very large picture of what was still on farm a month or two ago.
Yeah.
But yet now you have a carryout number that comes in at 1.540, which should logically be lower if you get off that export number. And so what I wonder is the corn out there? I mean, to me, that number says it's not. It's not
right
out there the way they said it was out there. And so now you're the farmer and you start to watch basis numbers adjust from place to place, and think to yourself, okay, if you're the farmer and you thought, well, I'm going to sell it at 470, and now all of a sudden they bring you these numbers, maybe that 470 is now 510.
Yeah, and
I'm not suggesting that. I can hear farmers 100%. All over the place, closing the barn door. But you think about the psychology of this, is that they've really disincentivized, and to be clear, I think that this rally should be rewarded sooner rather than later, right? Sooner rather than later, because you never know what's going to happen politically in the next 6 weeks. I would rather have cash and re-own than be sitting with a bin full of corn. But
and that's where I don't want to say the USDA is trying to play politics, but are they giving a warning of future export headwinds? Right? We saw with the Trump administration the first go around. Trade was in the air. I have to admit, this time around, I have more confidence that the Trump administration knows how to deal with China and has done this before. China knows what to expect from Trump and their administration to some extent as well. Not that makes me feel comfortable that business is going to carry on as usual without some hiccups in the road. But I do, in the back of my mind, start to think, with now slamming down on production numbers, is that in response to the potential politicalization of exports maybe not being there in the future? I don't want to play that game or play a guessing game until we know more facts, but or try to pigeonhole the USDA as in that was their thinking, right? But you got to wonder, right? You got to wonder why for so long it took them to acknowledge this. In my opinion, that kept prices down. And, now we're getting, another number or another, they've turned a leaf. They've given us another perspective on production that has changed the marketing, the ability to market and the market price, in my opinion. And I've got such mixed feelings about it. I love seeing the rally for our producers. Hooray, right? Finally, I think we can all breathe again and think and take the idea that contract lows are now on the table, right? It may be again if things turn south, but for the time being, this looks like, a rally that's going to have some legs.
certainly bad mojo when you come out with reductions like this, eye-popping reductions that force people to get out the sharp
It's
pencil.
a bittersweet, right? Like you enjoy the fact that the price is rallying, but at the same time, it's like, why wasn't it, why did it have to go down like it did?
You got one job, right? I mean, count the stuff and tell us what it is. And, Dan, and not to belabor this because we've talked about this before, and maybe this isn't the right forum, but what they had been saying for a while is that the model is broken and they knew the numbers were bad. And it's the same thing with the jobs numbers, that the model's broken and they know the numbers are bad, but yet they traffic in these numbers and they force us to go out and talk with those numbers, and then they make changes here. Now, truly,
right,
and
what
I count
other data points do you have, right?
Right. Well, I count you among this crew, but there's a crew out there that's much sharper than me, and I'm very interested to see what they have to say over the weekend to kind of reconcile what I view as an egregious, like you have a duty to the American people to do this the right way, and it looks to me like maybe it's not being done the right way, and it would be different if it was just numbers like the jobs numbers. I can kind of forgive that. But these have a human. There's real people on the other side of these numbers, people with families and farms, and I mean, I don't want to get on the soapbox too much here.
Middle America doesn't care
job.
what the JOLTS number is and what NFP numbers are. Those don't affect you other than maybe your 401k and the stock market going up and down here and there. But stocks are meant to go up over time, blah, blah, blah. Right. There is a very real element of personal balance sheets, production, and livelihoods at stake with these numbers. And it's just, you got to get them right, man.
We would be remiss. We would be remiss if we didn't talk about the cattle complex. Cattle opened the week. Feb cattle 194.70. High was 199.10. Low 193.47.5. Last trade 198.77.5. Right near the high. That's up 472.
Do not step in front of a stampede, man. Wow.
That up 472.5 does not tell the true tale, because if you pull up a cattle chart, you look at, this is the third week in a row, I think, where you've seen a rally like this, and cattle are really, really up in rarefied air. And people say, well, why is that happening? I said, well, exports are great, decent at worst. And you've got cash trade that's on fire. And maybe, what about these numbers in Mexican screwworm and et cetera, et cetera. But this is a market that is really on the move.
Yeah, it is. And I think you hit the nail on the head, right? You've got strong export numbers still. There's always going to be demand for U.S. beef. We just got through the holiday season where, I'm not going to lie, I saw a lot of red meat on the table these holidays. My family didn't choose pork. It's still an affordable product, which, okay, that might mean that box beef prices continue to rise and, take that off the table a little bit. But for the time being, packer margins have been good. They've taken advantage of, the rally here. And I do think they even coaxed in some news on Mexico, maybe flooding us with feeders, only the next day to pull that news away. That was pretty much on the 8th there. That pullback was all based around rumors of feeders coming across the border again. That has not come to fruition. And then lastly, we finally got into the midst of a winter market here. A weather market.
Don't be short in February.
Absolutely, yeah. Right. I'm looking out the window. We just got snowfall here today. Finally, it's freezing across the country. Strong cash prices, weather market, and a market that had honestly technically had broken above all the levels already and was technically still sending bullish signals. Now you've got fats. Almost every contract of fats heading to a contract high for itself. I know April is there. Feb's just shy of it, but that's because it needs to hit that 199 figure. And at that point, we're at all-time highs for fats. So, how long can it stay up here is the $1 million question, of course. But while there's that strong cash bid, I think you're at 205 to 210 from what I saw today in the fats. Feeders too. March feeders at new highs. August feeders at highs. We're definitely getting up into levels.
Let's knock these numbers out. Opened 264.60, high 271, low 263.62.5. Last trade 269.40, right up against those 271 highs. And here again, up 522.5. I mean, that's not the first week that you've seen that. 2 or 3 weeks of up really nice with really nice gains. And so I'm not sure that the feeders are the leaders, but they surely ain't the laggards. You know what I mean? This stuff seems to be traveling in tandem. And
they're confirming each other every day, right? And I will say this, we spent so much time from September of 23 all the way through September of 24 in a big sideways consolidative range. We are finally resolving that range to the upside now in cattle.
Technically, there's nothing overhead.
Nothing but
previous highs.
Previous all-time highs, but once you tag those levels, you're into new uncharted territory.
For sure. Should we do some news?
Let's go.
All right. First news story this week involves...
the news that we just can't quit.
Yeah, we can't get away from these. Let's find that. There we go. Okay, so just to remind Dan and I, or me personally, but Dan, maybe Dan not so much, how flawed we are as analysts, still in the news. H5N1. Health officials ramp up H5N1 funding as USDA tightens biosecurity rules, says Chris Clayton from DTN. Biden administration on Friday announced it would award $306 million more to address avian influenza cases in humans, especially livestock workers. Most of the funds, $183 million, will help prepare hospitals for the H5N1 cases, research and training, including $43 million to the Special Pathogen Treatment Centers for Avian Influenza Preparedness. Good work if you can get it. Centers for Disease Control and Prevention will award $103 million to local jurisdictions to increase monitoring of high-risk populations, such as livestock workers and others who are exposed to infected animals. Another $8 million will go toward distributing additional influenza testing kits. CDC reports there have been 66 human cases nationally, including 36 people in California who work with dairy cattle and 23 cases involving poultry workers, which normally we wouldn't care about, right? Okay, so 66 cases, but our deal, and especially at the beginning of this, is it doesn't jump to humans. Well, it turns out that it does jump to humans. I would be remiss if I didn't say that is a big deal. All right. 36 people in California who work with dairy cattle, 23 cases involving poultry workers. Almost all cases have been mild. Still, there is an increased concern after a more severe case of H5N1 was reported in Louisiana in mid-December, involving a person who handled backyard flocks and showed signs of mutations that could more easily infect people. There's the big deal. A similar severe case in November involving a teenage girl in British Columbia, Canada, also showed signs of mutations. Since finding the first case of H5N1 in dairy cows last March, there have been 915 herds affected across 16 states. California, which declared a state of emergency in mid-December, has become the epicenter with 699 dairies hit by the virus since its first cases were discovered in late August. Biden administration has come under fire from scientists over the response to H5N1. When the USDA announced a federal order to test milk nationwide, researchers said such a move should have happened months earlier. Ag Secretary Tom Vilsack said he believed USDA had been pretty aggressive as far as animal health issues. Vilsack also noted USDA had accelerated vaccine production for bovines with 7 potential vaccine candidates in the works. Vilsack added, the vaccine doesn't solve the problem. Make sure we're clear about this. It reduces the shedding of the virus, and therefore it reduces the risk of spreading it, the risk of more and more cross-contamination, says Mr. Vilsack. So I don't know what to say about that.
I still don't understand why it's a cattle story at all. Cattle aren't dying. We're not killing cattle.
Cattle workers aren't dying.
Right. I mean,
let's knock on wood, because our record on this has not been great. But
but it still hasn't become the pandemic that they continue to fearmonger us on, right? And that's what I think you need to take away from it. However, I don't know why we're not talking about how this has affected our poultry institutions. We are seeing egg prices become inflated because when the chickens get this, it is a kill event. So there is a change, there is another story here that's not being discussed, I think, enough. And they're making it about humans and cows when that's not really where it's affecting us, our pocketbooks or the economy right now. But okay, you got to let the story develop and let the news hit and report it as such. So dry spells are now putting southern Brazil soy farmers on alert as rains pound central regions. Robert Samoro from Reuters gives us a story on the weather conditions in South America. Dry weather is limiting soybean development in Brazil's southernmost state, which, hey, that could be another reason that we finally have seen a rally here, right? Now that we're starting to see weather markets in South America, something we didn't discuss earlier, and have been kind of put on a back burner, right? But putting farmers on alert as there at the same time as excessive rain is set to disrupt early harvest in central areas of the country. So you're getting hit by harvest rains, which are always detrimental, and production heat and dryness in other places. Expectations for the 2025 soy harvest in Brazil, the world's largest producer and exporter, are sitting above the 170 million metric ton mark. But output in Rio Grande do Sul, where rains have been scarce, is essential for achieving the target, which would be a record, according to some private consultancies. The state, which borders drought-stricken and large, and I do want to comment that real quick, is of that all those private consultancies still have numbers still well above where the USDA is starting to acknowledge those increases in production in Brazil as well.
They kicked that can down the road today with those South American numbers unchanged.
Yep. Well, they didn't. I mean, that's probably the only thing they could have added to that report to maybe throw a little bit of a wet blanket on that rally. But I don't know. I think it would have, the production numbers we saw to the U.S. and the carryouts were big enough to maybe even made any change they did to Brazil a moot point. So anyway, the state, which borders the drought-stricken and large grain producing Argentina, could harvest more than 20 million tons if the most upbeat forecasts are confirmed. There are also concerns about excessive rainfall disruption in the start of the Central West harvest. In the northeastern region of Rio Grande do Sul, accumulated rainfall for the next 10 days will exceed, at best, 20 millimeters, where in the behemoth farm state of Mato Grosso, some areas will receive around 170 millimeters. That's almost 70 inches for those of us that don't know how to convert metric into imperial.
It is now getting traction. They're claiming, one of the weather models is claiming that they're going to get rain here toward the end of this forecast, and other folks are saying no. Some folks say that even if they get the rain, it won't be enough. But any way you slice it, pick a model. We're now, so put this WASDE behind you. We're now squarely weather market with all eyes focused on South America.
Yeah, and that's actually a really good point. I think the USDA just gave us numbers in this WASDE report that are solidly the best numbers you're going to see for the U.S. side, at least for a rally, right? So now you do shift a focus to exports and, of course, the very important weather market in South America into the end of their production season.
So third story here, Biden releases interim guidance for 45Z tax credit, leaves final rules to Trump, from Todd Neely at DTN.
And this might be one, Joe, where it's going to be interesting to see how people digest this news over the weekend. Guys that are a lot more smarter and knowledgeable on the GREET system, right? Not that we can't help anybody out with questions you have, but we're certainly not going to sit here and, claim to know we know everything about that was said today.
We're going to cover this because this is Carter, our producer's pet story. And so he feels very strongly about the 45Z tax credit and the implications that it has for
and it's huge.
Agriculture.
It's huge.
Very concerned, Carter is. I don't know if he's got relatives in the ethanol industry or what is going on here, but he's very serious. Biden administration on Friday released much anticipated guidance on the 45Z clean fuels production tax credit with an update of a widely used greenhouse gas emissions model expected soon, like next week soon, from what I understand. But Dan, this wouldn't be the first time we've heard that, of course, because we were there bright and early hungover a year ago, and they didn't.
But I am happy to see that they are giving us this guidance, as they said before Trump's inauguration, and will pass that torch to the new administration. What they do with it, that is definitely up in the air. But at least there's going to be there's something there for people to become knowledgeable on and make a decision over.
In addition to the guidance, the U.S. Department of Energy is expected to soon release an update of the Greenhouse Gases Regulated Emissions and Energy Use Technologies, or GREET, model to be used in determining emission rates for 45Z. According to a news release from the Treasury, 45Z consolidates and replaces credits for biodiesel, renewable diesel, and alternative fuels, as well as an Inflation Reduction Act credit for sustainable aviation fuel. Friday's guidance publishes the annual emissions rate table, which I think we'll have in the video, that directs taxpayers to use the 45Z CF GREET model to determine the emissions rate of non-SAF transportation fuel, and either the 45Z CF GREET model or methodologies from the International Civil Aviation Organization for SAF. Treasury said guidance on a provisional emissions rate process would be provided at a later time. Such a process would be designed for fuel pathways and feedstock combinations not specified in the emissions rate table. Also, absent from the guidance released Friday are rules for incorporating emissions benefits from climate-smart agricultural practices. Absent, right? So they're talking about giving benefits to the producer of the fuel, not the blender. But now here you're going to get some guidance coming up for the
And I think that's in
of
reference to the pushback that we've seen based off of, the three-tiered approach of smart nutrients, no-till, and oh geez, what was the other one? I'm blanking now. But we all know that, the things that most people said, only
Yep.
10% of farmland could
For
actually do. It's good to see some guidance being released here on it.
Treasury said on Friday it intends to propose rules for incorporating climate smart ag practices involving those crops, beans, corn, and sorghum used for feedstocks. According to 45Z, a fuel must be suitable for use as a transportation fuel. Treasury and the IRS said they intend to propose that a fuel eligible for the 45Z credit must itself, or when blended into a fuel mixture, have either practical or commercial fitness for use as a fuel in a highway vehicle or aircraft. So it seems to me that we understand that there's a fitness, as we spoke with a gentleman from a rather large airline that said, we'll take, X million barrels of this, X million gallons of this very day, today. If you have it, bring it to us. We'll use it today. So I'm guessing that the fitness question is probably asked and answered. But as you say, it would still be good to see the guidance.
That fitness question also has to do and answers the one concern that a lot of people had, which was, can imported oil seeds and other products be used for this? And the big answer is no. It has to have come. And it is no. It has to come 100% from domestic production, which I have to applaud that we get that rule in there. Well done. That is exactly the type of thing we want to see.
Absolutely. Absolutely. So Dan, if we could bottom line this, right? I mean, we covered a lot of ground here today. I think we did it in record time. Kudos to us, right? But so where do we stand? Where do we stand here today? Certainly a surprise. And I had been saying for a few days to customers and folks that we speak with, I cannot imagine a bullish surprise that the USDA could offer for soybeans. I just can't imagine what it would be. And now here it is. Right.
We were set up with the expectations into this. The trade was expecting a bullish report, right? We were looking for reductions across the board in everything. And boy, I got to hand it to the USDA to some extent. They hit the, knocked the skin off the ball, so to speak. They knocked it out of the park and totally blew away any expectations the trade had. It then, we all get a little salty because we're, kind of sit here and wonder why we had to sit through the old numbers and only get things acknowledged here on January 10th. But, it's a welcome surprise, I think, for our producers. And certainly, it allows us to take a pen and a pencil back to the marketing plan and determine some better, prices for selling now, right?
Is that our takeaway here? We maybe have turned a corner, and you have the possibility for momentum to continue to push this bean move higher, momentum to continue to push this corn move higher. But in terms of marketing, should we be rewarding this, or should we be dragging our feet a bit?
I mean, that's the $1 million question, right? The type of momentum and move we saw today is probably going to see some follow through. When we look at the charts and the technicals, there's levels still above that it now would make sense for the market to head to. But I would be reminiscent about price, some of these prices from last year, that when we didn't take those that didn't take advantage of them then were met with 9 months of pretty stringent regret until now. Right. And that's marketing for you, right? Prices won't go up forever and they won't go down forever either. You have to take advantage of them when the time is right. Today may not be that exact moment to do so, but it's definitely the time to start having that conversation and discuss what to do when the time and price is right.
And the way that we're looking at this is that certainly there's the potential for weather trouble in South America.
Yes.
And it could get dry, and that could be significant and result in significant price action as well. But if they do catch some timely rains, as crops are known to do down there,
the quite proverbial, wet blanket on this fire market right now, or this rocket ship,
Sure.
And one last point to that too is that, we're going to start now focusing on the weather markets in Brazil, but we're going to start talking about the planting and acreage expectations here coming up in a couple months as well. So the narrative is just simply shifting, to the next data points and data sets, but at least we're catching us all in a little bit of a bull market.
Got you. All right. I bet we can leave it there. Anything we need to add?
I don't know. I think we'll have a lot more to say about the 45Z tax credit in the coming months. We're going to be watching the cattle rally up into what looks like new highs, and those stories developing. And it's a good time to have some grain and be a producer, I guess, again.
Dan, it's that time of
Question
the episode
of the week.
It is that time of the episode. What is your favorite dish to cook? Now, I know that you're a married man and a family man. You do a great job. Are you tasked from time to time with putting the items in the pots or the pans?
Yeah.
Do you know how to cook?
I did not marry a woman who cooks. I cook all of our meals. So I'm
all right.
I am the head chef in our household. I'm going to go with my favorite thing is probably one of my family's, favorite little recipes, the spaghetti carbonara. I do a wicked carbonara.
What's in that?
So it's basically and I use that bucatini pasta. It looks like spaghetti, but it's big round and has a hole in the middle of it.
Oh, wow.
Anyway, because, I don't know if you knew this, Joe, but not all pasta tastes the same.
I did not know that.
Even though it's just flour dough. No, but a carbonara sauce is an egg-based sauce. So we cook the pasta, drain the pasta, don't let it cool too much, throw it right back in the pot and throw it with some blended egg in the blender with like a cup of Parmesan cheese, and just literally dump that over the pasta and let it cook in just from the heat of the pasta. We also do some, either pancetta or some ham with it too. But that is one of my favorites.
I have to say that just listening to you talk about cooking that has made I'm starving again. We just ate probably 3,000 calories for lunch, and I'm hungry yet again. Now that I'm going to have to go find a place down the street here to serve me some, what do you call it? Spaghetti carbonara?
Carbonara, man. Yeah.
Carbonara, huh?
Carbonara. It is good.
For me, this is a simple question. I cooked Christmas dinner. That's one of my favorite things to do. We cook all of the stuff, the pierogi, the sauce, do sauces from all over the place, different places, ham, potato salad. It's just one of my favorite times of the year, and we cook everything, and it's just great. Having said that, one of my favorite dishes to cook to fuel me on a day-to-day basis, I'm sure nobody's going to be surprised, it is American-raised, locally sourced red freaking meat. And I don't care what it is, steaks, ground beef, whatever you got, and you throw it in a pan and cook it right up and then eat it right there on the spot. It's nice and juicy. Don't even need condiments. Just put it on some sourdough bread.
And Joe and I have gotten into a lot of arguments about searing or reverse searing. It's all the things.
And at the end of the day, I'll take it. Any, you want to sear it, you want to reverse sear it, you want to boil it, you want to broil it. I don't care, as long as it's red meat, as long as it's from here in the United States, and as long as I know who made it, I'm all over it.
Well, thanks for joining us, everyone. It's been great having you here and listening to our Zaner MarketCast. If you need more information just because you can't get enough, give us a follow on Facebook at the Zaner Ag Hedge, or Twitter and LinkedIn at the Zaner Group. If you want to leave us a question to get answered right here, there's a link for you to do so in the description. Just follow the instructions and we'll get it answered. Thank you again, and be sure to like, comment, and follow the podcast and not miss a beat. And we will be back with you all as price action develops. Take care.
Have a great weekend, everybody.
And a great weekend.
Dan, did you think I was going to say kale casserole? I certainly ain't eating no kale.